Good morning, everyone, and welcome to today's webinar about the new plastic packaging tax, which came into force a couple of weeks ago on 1st of April, brought to you by the Institute of Export and International Trade. My name is William Barnes-Graham, the Senior Content Editor at the Institute, and I will be your host for this afternoon. And on the next slide, it is my delight to welcome our speaker today in Suzanne Alecrim. Hi, Suzanne. Great to have you with us again. How are you today?
Hi, Will. I'm really good, thank you, and great to be here and looking forward to the Easter break.
Aren't we all? And fortunately, it's beautiful sun at the moment, which is why my blinds are completely down, because otherwise I would be blinded. So great stuff. As you can see, Suzanne is a customs and trade specialist at the Institute and one of our lead experts on product compliance. So you're definitely in safe hands today. On the next slide, though, before we get into the presentations, we're going to run a quick poll to find out a little bit more about you, our audience, and how aware you are of the recently introduced plastic packaging tax. So the answer options there are understand it in detail, some understanding but need to know more, heard of it but don't know much about it, or hadn't heard of it until this webinar. While you're answering that poll, just a couple of housekeeping notes from me. Firstly, you can contact me with any comments or questions using the question panel on the control window to the right-hand side of your screen, usually. We hope to get to a number of your questions during the Q&A today, though please note we cannot guarantee we will get to every question in the allocated time, which is about 45 minutes. A quick tip, if your questions are concise and easy for me to read and have broader relevance to the wider audience, I am more likely to ask them. Secondly, you will receive access to today's slide pack, as well as a recording of the webinar in a follow-up email we will be sending over the next day or so. So please do try to listen in as carefully as you can to today's discussions. So I'll give you a couple more seconds to answer that poll while I put my teeth back in. And going to share the results now. So 4% of you understand it in detail. 44% of you have some understanding but need to know more. 43% of you have heard of it but don't know much about it. And 9% of you hadn't heard of it until this webinar. Suzanne, is that surprising there, the level of awareness of the tax?
No, I think that's actually really good that we've got, a large amount of our viewers today have some knowledge and they've heard of it. So the industry are aware of the tax that came into force on the 1st of April, but people now need to actually start doing something about it. So our webinar today will give everybody, hopefully, the background and information that they need so they can actually get themselves registered, check that they do need to actually register for it.
Absolutely. Thank you, Suzanne. It's obviously a very timely webinar coming just after the introduction of the tax. So I hope everyone finds that useful. Thank you for answering the poll. And without any further ado, over to you, Suzanne, for the presentation.
Thank you, Will. So welcome everybody to today's webinar, which is about plastic packaging tax and what you need to know. The new plastic packaging tax was introduced on the 1st of April this year, and it's applicable to finished products that do not contain at least 30% recycled plastic. So today we're going to answer the question of what is the new plastic packaging tax and get an understanding of the legislation and regulations behind it. We'll look at what plastic packaging is, subject to the tax, how to calculate the amount of recycled content, and the waste that's generated in the manufacturing process so that you can reduce your tax liability. We'll look at how to calculate the amount of tax due, what is out of scope, what are the 4 exemptions, and what to do if you export the plastic components that you manufacture. We'll also look at who needs to account for and register for the tax, at which point in the supply chain does the tax become liable, and what the process is to register. We'll also address how to account for PPT, how to make returns and payments, as well as what conditions need to be met to claim a tax credit. And we will cover the importance of record keeping, understanding the evidence that you need to keep on file, as well as carrying out any due diligence to ensure compliance within your supply chain. And finally, we'll have a look at the next steps that you need to take. So what is plastic packaging tax? This was a tax that was introduced as an environmental tax on the 1st of April, and it's designed to provide a financial incentive for businesses to change their plastic production processes, to reduce the amount of single-use plastic in circulation and the amount of plastic being sent to landfill or incineration. The primary legislation for the tax forms part of Part 2 of the Finance Act of 2021. It's envisaged that the plastic packaging tax will create a greater demand for recycled plastic and stimulating increased levels of recycling of plastic waste. In March 2022, the UN Environmental Assembly endorsed an historic resolution to end plastic pollution and forge an internationally legally binding agreement by 2024. Addressing the root causes of plastic pollution and not just dealing with the symptoms that we see today, such as the Great Pacific Garbage Patch and other ones that are around the world. This is generating change to the circular economy, which is based on the principles of designing out waste and pollution, keeping products and materials in use, and regenerating natural systems instead of taking resources from the earth and then returning it back to a landfill site. PPT will arise when a chargeable plastic packaging component that is defined as a finished product is produced in the UK or is imported into the UK for home use, where the recycled content is less than 30%. Where manufacturers and importers cross the 10-ton threshold within a 12-month period, they will be required to register for the tax. The UK government are levying the tax at £200 per metric ton weight of plastic only. This doesn't include the contents. So for example, if you have a 500-gram bottle of shower gel, where 490 grams are the product and 10 grams is the plastic bottle, the tax would apply to the 10 gram of plastic and not the 500-gram weight of the filled bottle. This will also apply to a component made up of materials other than plastic, where plastic is the major component in the makeup. There are also some exemptions in place, and we'll look at those shortly within this webinar. So, what counts as plastic? For the purpose of PPT, plastic is defined as a polymer material to which additives or substances may have been added. When assessing the amount of plastic in a packaging component, the additives are classed as part of the plastic. And just to note that cellulose-based polymers that are made up of plant-based renewable composites are not subject to PPT. Plastic polymers, which are biodegradable, compostable, and oxo-degradable, are also included in plastics that are subject to the tax. For the purpose of the tax, all plastic is assumed to be made of non-recycled virgin material unless there is evidence that recycled material has been used. And there are specific guidance on what's acceptable as recycled plastic as well. Recycled plastic must be genuine waste that would otherwise have gone to be used for energy recovery or disposed of as waste in landfill or incineration. Recycled plastic, where 30% or more of the weight of the product is recyclable, will not be subject to the tax. However, it does still count towards the 10-ton threshold, and traders do need to keep records of this. Reprocessed plastic, that's scrap or regrind, that has been reused during the manufacturing process, or waste material that's been factored into a production process to be ground or melted before being reused in a similar process, are not classed as recycled material for the purpose of the tax. Organic recycling is also not an acceptable form of recycling for the purpose of PPT. This is plastic that has undergone aerobic or anaerobic treatment under controlled conditions using microorganisms of biodegradable waste. So what is a plastic packaging component? Plastic packaging is deemed to be plastic where plastic makes up the greater weight of all the components. For example, if a component weighs 10 grams, but this is broken down to 3 grams of cardboard, 3 grams of aluminium and 4 grams of plastic. As the plastic component is the greater weight, then the whole component is deemed to be plastic. The tax would be chargeable on the 10-gram weight of the component. A plastic packaging component is defined as a product that's designed to be suitable for use, whether alone or in combination with other products, in the containment, protection, handling, delivery, or presentation of goods, at any stage of the supply chain of goods from the producer of the goods through to the consumer or the user. A packaging product can be a single component or one that's made up of a number of components. For example, a drinks bottle that's made up of a bottle, a cap, and a label. All of these 3 components will be treated separately for the tax. Examples of the types of products that are subject to PPT are plastic bottles filled with drinks, ready meal trays, bubble wrap, sticky tape, and single-use products such as sandwich bags and bin bags. The weight of each plastic component and the recycled content must be accurately calculated to be able to calculate how much PPT will be due. Each plastic component must be considered and accounted for separately. And remember that a product made up of other materials will be classed as plastic for PPT purposes if plastic is the greatest component by weight. HMRC have 5 approved methods for calculating the weight of a plastic component. The first method is the individual component method, and this is where the weight of every single plastic component is individually weighed and recorded. The sample component method is where a sample weight for a plastic component for a production line is used, and the weight of any waste attached to a component when it is finished can be deducted. The check weight sample is identical to other plastic components of the same type, and the trader would weigh a random selection of plastic components as part of their due diligence to keep evidence on record that they are checking the sample weight and that there is no variation from batch to batch. Especially if you're changing your manufacturers, suppliers of raw materials at this point, you just need to keep checking that that recycled content is still the same as it was when you did the very first sample. The next method is the material inputs method. And for this method, identical components are manufactured on a production line. The trader would take the total net weight of the material put into the production run and divide it by the number of components that are manufactured on the production run to get the weight of each plastic component. As this is the net weight, the weight for any known waste in the process can be removed from the calculation. We then have the verified specification method, and this is where the weight of a plastic component is taken from the product design specification. The trader weighs a random selection of plastic components to check that they meet the specification and maintain these records to demonstrate due diligence. If a trader is importing plastic components, this method can be carried out by their overseas manufacturer by keeping records of the check weighing sampling process that is audited by the importer. And the final method is the bulk weighing method. This is where on a production run to manufacture identical plastic components, all the components from the run are weighed and the weight is divided by the number of plastic components to get the weight of an individual component. So to calculate the weight of recycled plastic used in the process, the trader needs to take the weight of the recycled plastic, and in our example here, it's 660 kilos of recycled plastic. This can be verified either from the process and certified, or from the supplier that they purchase the recycled plastic from. Then we need to divide it by the total weight of all of the plastic in the finished components. So the total weight here is 2,000 kilos. Then we multiply the answer by 100 to reach the percentage of recycled plastic content. And in our example here, it comes out at 33%. So if a component was 33%, then it would not be subject to the tax. And there are three types of components that are not subject to the tax, but these need to be included when calculating the amount of plastic in the 10-ton threshold. These are for primary use of storing goods long term. So an example of this usage is a glasses case. So the case has been manufactured and designed to be filled with glasses when it's sold. It can be used to store other glasses, not just the glasses that are supplied when it's purchased. And the packaging function is incidental to the storage function. Goods that are an integral part of another good. These are goods that cannot be used or consumed without the component. The component will be discarded once the goods are used or consumed. So a good example here is an ink cartridge that you put into the printer. The printer can't work without the ink cartridge, and the ink cartridge wouldn't be any use at all on its own without the printer. And the third component is the plastic packaging designed to be used for the presentation of goods to a consumer. It's designed to be reused. It's recorded as permanently set aside for this purpose before or as soon as it's manufactured or imported. An example here would be a display stand in a shop. And we've included a link here to gov.uk where you can find a list of packaging that is in and out of scope of the plastic packaging tax. So we're now going to take a look at the plastic packaging components that are exempt from plastic packaging tax. There are 4 exemptions in total, regardless of how much recycled plastic they contain. And we'll also look at what happens if you export the products that you manufacture or import. So exemption 1, this is transport packaging. It's also tertiary packaging when used to import goods into the UK. Packaging components used to transport multiple sales units, so the multiple sales units is key here, or group packaging to prevent damage during transportation. This exemption can be applied where all the following conditions are met. The packaging must be used to deliver goods into the UK and transport multiple sales units or group packaging and prevent damage during transportation. It does not apply to primary or secondary packaging. So an example here would be a child's toy is packed in a plastic blister pack. It's then supplied to retailers in packs of 12. These packs are wrapped in further plastic to hold them together in a large box. When the toys are imported into the UK, several of these larger boxes are placed onto a plastic pallet and they are then secured and wrapped with film. The plastic blister pack, which contains the toy, is the primary packaging, and the plastic wrapping used to hold them all together in the larger box is the secondary packaging. These plastic components are not exempted. They would be subject to the plastic packaging tax. However, the plastic pallet and the stretch wrap film that's been used to contain the goods on the pallet are classed as tertiary packaging, and they are exempt. The tax is looking at how the plastic component is used and not what it is. Therefore, as a manufacturer or importer, it's important to understand the use of the components to declare them correctly. The second exemption is packaging that's used for stores on international aircraft, ship and rail journeys. The tax is not charged on packaging products that are used in stores for international journeys, and these can be stores on aircraft, ships or railway vehicles that travel to and from the UK on a regular basis. If the plastic packaging is subsequently imported and therefore removed from the stores and released into the UK, this import will need to be recorded along with the weight and any recycled content of the packaging. Any packaging components that are covered by exemptions 1 and 2 do not count towards the 10-ton threshold and do not need to be registered for PPT. Exemption 3 covers any plastic packaging produced or imported for use in the immediate packaging of licensed human medicine. Immediate packaging is a container that's immediately in contact with a medicinal product when it's produced, such as plastic medicine bottles or blister packs for tablets. The medicinal product must be licensed by the MHRA, the Medicines and Healthcare Products Regulatory Agency, to be exempt from PPT. And the final exemption is plastic components that are permanently designated or set aside for non-packaging use. For example, plastic film that's manufactured to coat whiteboards rather than being used as a packaging. Another example could be the film being manufactured to wrap hay for the purpose of silage. The manufacturer must provide clear evidence to verify any claim for this exemption and must keep records to show that the products were set aside before or as soon as they've been manufactured or imported for their intended non-packaged use. It must be known at the time of manufacture or import of what the intended use will be in order to be exempt from paying the tax. Exporting plastic components is allowed as a way to defer tax liability. The manufacturer must have always intended to export the packaging components, so we go back to knowing the intended use of the components when they're manufactured, and the components must be exported within 12 months of manufacture. By declaring the components to export, the tax can be deferred, and if there is a change to plan and the components are no longer going to be exported, the deferment can be cancelled and any due tax can be paid within 12 months. Also to be aware that the trader might not export, but their customers may do so. Therefore, it's important to ask customers to tell you if they export any components that you supply, as the tax could be deferred. If PPT has been included in the price charged to the customer, then this could be discounted. Therefore, it's in the customer's interest to work with the trader and provide evidence that the component has been exported. And back to you, Will, for our next poll.
Thank you, Suzanne. Lots of information there already. So I hope everyone is finding that useful. I'm certainly finding it very informative. So I'm just going to launch the next poll, which is asking, to what extent will your business be impacted by the new plastic packaging tax? Just a quick note before I ask a couple of questions. As people have been asking, the recording will be shared with everyone and by email over the next day or so. We'll also be uploading it to our YouTube channel. Just search for Institute of Export on YouTube and you should find that. The links on the slides, you'll also be sent a copy of the slides and the links will be clickable in that PDF. And just as we go into the questions, we're getting quite a lot of company specific questions. My approach is going to be to ask questions which are relevant to the wider audience. So if you do have any specific questions afterwards, please do look at the Institute's consultancy or technical helpline offerings. We'll have a slide at the end saying a little bit more about those. Suzanne, question from Sharon though, which I think is relevant. Will this new tax apply to very small businesses or will there be an allowance for such businesses?
So the tax isn't actually looking at the size of the business, it's actually down to the amount of plastic. So the threshold is 10 tonnes of plastic over the 12-month period. So the company would need to have a look at to see whether they actually meet that threshold. So by looking at all the components that they have on coming in, what they're going to use and send out, seeing where they fit in into that supply chain, and just keeping a track of all those components, just checking that recycled content as well. If they are small and they don't meet that threshold, it's still good practice to maintain those records, because at some point they may actually come into line with that. So yes, so it's not actually on a business basis, but it's more the actual consumption, the threshold that they've set.
Thank you, Suzanne. I hope that's helpful, Sharon. And a question from Pamina, a few people have been asking it. Does this tax only apply to empty packaging or is it to the packaging around our goods, which is already reported under the packaging producers legislation?
Yes, so the plastic packaging tax is separate to the obligated packaging producers regulations, and that one is for the environmental waste. So as you can see, there are lots of different taxes that are coming into place for different things within the plastic industry. So you would actually need to be registered for both of those. In this case, though, the tax applies to packaging at the point of which the product is being manufactured. So as we've said, you know, an example would be a bottle that's manufactured and then, for example, sold to a shampoo manufacturer. the tax is paid at the beginning of that supply chain, so it's not going to be accounted for by the retailers or the consumers when the product is whole, and the tax is likely to be built into the sales price of the product. So it would be the empty packaging sort of from that final point of where it was manufactured. If the product is then packed into boxes with the shrink wrap around it, that shrink wrap again is likely to be a secondary packaging, and the tax is going to be applicable to the bottle as well as to that wrap. So primary and secondary forms of packaging is what you need to look at, and the exemption that we talked about is going to be for the transport. So then if you put that onto a pallet and wrap it again, that tertiary is going to be exempt from the tax. And just that mention about the packaging producers legislation, we are going to be running one of our lunchtime learning webinars in July for our members. We're actually going to cover the extended producer responsibility then, so definitely worth looking out for links for that and signing up for that when that comes on, so we get a little bit more information for producers later on in the year.
Thank you, Suzanne. And we'll, I don't know if that event's up on the site yet already, but if it is, we'll send the link to that in the follow-up email. I'm just going to close the poll and share the results. So 16% of you say you'll be greatly impacted, 28% of you somewhat impacted, 19% of you a little bit impacted, 9% of you not at all, 27% of you not sure yet. So I think a majority of people are either greatly, somewhat, or a little bit impacted. Is that surprising, Suzanne, that so many people are impacted?
If people are definitely manufacturing the components and part of that, the plastic supply chain, then we would be expecting a lot of people to be greatly or somewhat impacted. I think once people start to establish where in the supply chain, I think there has been a little bit of a misunderstanding. I think everybody thinks everybody in the chain is paying the tax. That's not the case. You need to establish where that final point is, which is that final substantial point of manufacture. That is the only point that it does get paid. People who are not sure at the moment, still assessing those supply chains, just checking who within those supply chains has that responsibility. So yes, it's yes, I would actually possibly would have expected more people to be affected by it, I think, but maybe people just need to establish those points within their supply chain to see if they are affected.
Thank you, Suzanne. And yeah, we'll come on to a few more questions in a few slides' time, but for now, back to you, Suzanne, for a few more slides.
Thank you, Will. So now we're going to have a look at who should account for the plastic packaging tax and how you need to go about getting registered for it. To understand who within the supply chain is going to be responsible to account for PPT, you first need to understand when a plastic component is finished. A product is finished when it has undergone the last substantial modification before packing or filling. A substantial modification is a process that makes a change to the packaging component. This can be a change to its shape, structure, thickness, or weight. For example, extrusion, molding, or printing. Blowing, cutting, labeling, and sealing are not classed as last substantial modifications. A component produced or modified in the UK, the business responsible for finishing the product is responsible for the tax. If a component is imported already finished, the business responsible for importing is responsible for the tax. The tax only applies to packaging finished in the UK or imported into the UK after the 1st of April 2022. Products already manufactured or imported before this date will not be liable for PPT. If PPT is going to be accounted for by the supplier, the trader must carry out their due diligence to make sure that the tax is accounted for and paid so that they do not become liable for the tax. Legal requirements have been put in place to allow changes to be made to the terms of contracts to account for PPT, unless the terms of the contract specifically prevent any changes being made. A contract can be changed in two ways. by adjusting the price of a component to include the tax, or they can be updated to require the buyer to provide information to the seller on any substantial modification they will make to the plastic component, which could entitle the supplier to claim a tax credit where the tax has already been paid. Within the contract, the buyer can also make sure the supplier is taking care of any taxes and duties for the goods supplied that fall under the responsibility of the supplier, and any technical or quality specifications could be included, especially if the trader is going to use the verified specification method for calculating PPT. Manufacturers and importers need to keep records to show the supply chain history of the plastic they purchased, and this needs to evidence the percentage of recycled plastic in any raw material purchased or finished product, and they need to evidence what is the last substantial modification to the plastic component so that they can document who in the supply chain is responsible for accounting for PPT. It's a good idea to obtain certificates to back this up, and also if possible to carry out on-site physical inspections or audits to verify the information that's being provided to them. This all goes a long way to demonstrate compliance to HMRC to the tax. If you cannot show that you have taken reasonable steps to ensure PPT has been accounted for, then you may be held secondarily or jointly and severally liable for any unpaid plastic packaging tax, and this is actually consistent with other areas of tax. Online marketplaces and fulfillment houses are not likely to be aware of non-compliance to PPT until HMRC tells them about traders who are selling on their platform. They will have the opportunity to cease trading with a non-compliant business and remove them from the platform. If they fail to do so, they too can be held secondarily or jointly and severally liable for the unpaid tax. HMRC have issued guidance on due diligence required, and we've included a link here at the bottom of the slide. Manufacturers or importers of 10 or more tons of plastic packaging over a 12-month period must register for the tax. HMRC have two tests that traders can use to check if they need to register. The first test is if a trader is expecting to manufacture or import at least 10 tons of plastic packaging in the following 30 days. They will need to register for 30 days of the first day that this condition is met. Or for the second test, if a business has manufactured or imported at least 10 tons of plastic packaging in a 12-month period, the company becomes liable for the tax from the first day of the next month, and they must register by the first day of the following month. In the first year of the tax, a company only needs to register when the amount of plastic packaging exceeds 10 tons in a 12-month period from the 1st of April 2022. If you meet one of the tests, but all the plastic packaging is exempt, you must still register for the tax, submit returns and keep records, but no tax will actually be required. Businesses who are based outside of the UK, who are responsible for importing plastic packaging into the UK, must be registered and pay for the tax. You need to consider the Incoterm used in a contract of sale and note that for DDP Incoterms, the PPT liability will lie with the importer of record. If a trader no longer meets the test requirements and has reduced their plastic packaging weight to below that of the 10-ton threshold, they will be able to cancel the registration. And we have a link here to gov.uk on how to register for the tax. And back to you, Will, for our next poll.
Thank you. And this will be our final poll, and we'll once again do a couple of questions during it, but we're just going to ask you, have you registered for PPT yet? So, Suzanne, we've had a few questions just around liability and responsibilities. One from another Suzanne asked, is plastic packaging tax due on imports if the Incoterm is DDP? Is this the responsibility of the suppliant or the recipient?
Yes, so we just talked about the DDP Incoterm. So under DDP, Incoterms. Yes, that's correct. So the import of record is required to account for the tax. They're liable for all taxes and duties at import, so including VAT. Therefore, you need to review with the overseas supplier, and you must establish that they are registered in the UK for tax purposes, and they will account for PPT and any other taxes and duties that are due. You need to review that the responsibilities of the DDP Incoterms are being met by the supplier, who is the importer of the record, and that they do understand that responsibility. If the UK company is actually going to be taking care of that import and paying VAT and duty, and they're actually the importer of record, then you need to make sure that the correct Incoterm is being used, because I know that people do receive the goods in from the overseas supplier believing that they're under DDP terms, but actually the agent will put the import down to the UK company. So again, just double check those contracts that are in place and who is actually responsible. Just check that out and make sure the correct Incoterms are being used.
Thanks, Suzanne. And a question from a load of people, Olivia, Oliver, Tim, to name a few, is this. If our suppliers are not complying with the tax, do we as the importer then have a liability to pay it?
Yeah, so as importer, the importer, so you're either a manufacturer or an importer, it's the importer, it's their responsibility to account for and register for the PPT if you're bringing in that final plastic component into the market. So the substantial process of manufacture is what you need to look at. Is that component finished when you bring it in? If not, then you need to look at who in that supply chain within the UK. So it could well be you're bringing in a component and then you're going to do that substantial manufacture yourselves, in which case as the supplier of that finished component, you're subject to the tax. If it's finished when you bring it in, then you are, as the importer bringing it into the UK market, you are also liable for that tax. So in both of those conditions, you would be responsible for accounting for the tax.
Thank you, Suzanne. I'm just going to share the results of that poll. Perhaps unsurprisingly, it's only been 2 weeks since the tax was introduced, but 86% of you have not yet registered for PPT, 14% of you have. But conscious of time, so I'm going to hand back now to Suzanne for the final few slides.
Thank you, Will. So we're now going to look at how to do the tax return, make payments, and what records must be kept for plastic packaging tax. Traders will be able to submit tax returns and make payments online at the end of each quarter. So starting with the 1st of April, the first return and payment becomes due on the 30th of June. Traders must submit the return and pay any tax due no later than the last working day of the month following the end of the accounting period being reported. If a trader registers in the middle of a quarter, as they fulfill the criteria for test 1, they will make the declaration from that date to the end of that quarter. So if the period starts on the 1st of April, but the trader only meets the threshold on the 20th of May, they would account for the tax from the 20th of May to the 30th of June. If the trader discovers an error in the tax return, they must correct it as soon as possible, and they have within 4 years of the due date of the tax return that needs correcting to make that amendment. Traders may be charged penalties for not submitting returns or making payments on time. They may also be charged interest on any late payments. And again, this is in line with other requirements within the tax. HMRC, though, at this stage have said that they're going to be focusing on educating and supporting businesses and aim to help businesses meet their obligations with the plastic packaging tax. However, HMRC will take action against anyone who is deliberately avoiding payment of PPT and other taxes or negligent behaviour with monetary penalties. And again, this is in line with the other tax requirements. So HMRC are going to allow tax credits to be raised, but only for 2 reasons. The first is where goods have been exported, but at the time of manufacture, the trader was not aware of where the goods would be going to and accounted for and paid the tax. The trader will need to provide evidence that PPT was accounted for and paid, which is usually done by evidencing the tax return for the particular plastic component, as well as providing evidence of the export. It may also be the trader's customer that exported the component, in which case the trader can also make a claim for the credit for the tax paid. And again, they would have to evidence the tax accounted for and paid for on the relevant tax return for the component in question, and obtain evidence from the customer that the component had been exported. The second reason the HMRC allow for a credit is where the tax has been paid on a component sold to another business, who then substantially modifies into a different component, which is also subject to the tax. So they need to evidence the original tax payment from the original tax return, and also evidence the payment of the tax paid on the new component by the manufacturer. The tax credit would normally be offset against any future tax payments, but it can be repaid in some circumstances. So, for example, where a trader has no further liability for plastic packaging tax and has cancelled their registration. It's best to obtain information up front from customers to check if they will carry out a substantial modification, so that the correct actor in the supply chain can pay the tax correctly from the outset. This can reduce costs for both businesses. It's important that traders keep records to monitor their requirements for plastic packaging tax and for due diligence. As we've seen, traders need to record the weight of a plastic component, but also document the weighing method they use. They need to hold evidence on file that shows they've carried out check weighing of samples, or if they use overseas suppliers, that they've evidenced that the supplier is carrying out the check weighing. For any products with multiple materials where plastic is the major component and the product is classified as plastic for the tax purposes, the calculation will also need to be held on file for evidence of that classification. They should be holding on file any product design specifications that show the weight and composition of the products, any certifications that can evidence the weight and the percentage of recycled content of the input material. And of course, maintaining their online tax returns on time, evidencing the weight of plastic components they're manufacturing or importing, and keeping a check on the volumes going through the business. Over time, if traders do increase the amount of recycled content within their plastic components, then they may be able to reduce their liability for the tax. And records must be kept for a minimum of 6 years from the end of the accounting period. So even if a trader falls outside the 10-ton threshold or has above 30% recycled content in the component, they do still need to maintain their record. So even though they're not having to actually pay any tax, they do need to be able to account for it still. If the plastic components are out of scope, or if any of the 4 exemptions apply, or components have been exported, the trader still needs to maintain their records to evidence why the tax has not been paid. This includes the weight of the components, the weighing method, the percentage of recycled content. If there is any packaging made up of mixed materials containing plastic, where plastic is not the major component, again, this all needs to be recorded and evidence as to why the tax was not applicable. And for any goods that are exported, the evidence of export is required here. The official evidence, which is the goods departure message, the export declaration, as well as commercial evidence, such as the contract of sale, the invoice, bill of lading, or a certificate of shipment, that all evidence that the goods left the UK. So what are the next steps? The registration opened for plastic packaging tax on the 1st of April 2022. Therefore, it's important to understand your responsibilities as soon as possible so that you can calculate how soon you're going to reach that threshold. Start talking to suppliers and customers if you haven't done so already. Understand your supply chain for your plastic components, what you purchase, what you sell, and identify with your partners where the last substantial modification is taking place, so that you can all work out who in the supply chain will be responsible for registering, accounting for, and paying the tax. Update any contracts of sale or purchase with information relating to the tax, so that all parties are held accountable for providing information to record the data accurately. Update any pricing as well to include PPT. Create records of all the plastic components that are manufactured or imported. detail the weight of each item, the weighing method, the recycled content, and obtain certificates from suppliers to demonstrate the recycled level, and product design or technical specifications that detail the makeup of the product and the weight. These are needed to demonstrate compliance to the requirements. And if you're using the sample weighing method, create a testing procedure to check weigh samples and make sure that these records are maintained and the weight used for the PPT accounting is accurate. Carry out due diligence to make sure that if another actor in the supply chain is responsible for accounting for and paying the tax, that this has actually happened. Carry out any follow-up audits so that you can be satisfied that the PPT is accurately being recorded and paid, so that you don't have any liability for the tax. It will be your responsibility to carry out the most appropriate test for your business, to calculate the weight and see if you are above the 10-ton threshold and need to register for the tax. Keep records of any plastic packaging components that are manufactured or imported, and get registered for PPT so that the data is available ready for the first quarter return in June 2022. Thank you, Will. Back to you.
Thank you, Suzanne. It's a really great introduction there to what is seemingly quite a complicated tax for businesses to be dealing with. So thank you for that presentation. I do hope everyone has found that useful. So we're running slightly over the 45 minutes advertised for the webinar, but I do want to get to a few of your questions. So we'll run over slightly. Just a reminder everyone that the webinar is being recorded if you need to leave. But also a quick note to say we've received loads of questions, as many as we've received on any of our recent webinars. So we won't be able to get to everything today. I'm going to ask a few kind of particularly tradey questions, which feels that they'll be relevant to as many people as possible. But as we'll say on the next slide after this Q&A, how you can find out more information. But do please bear in mind this is a free webinar we're doing. So yeah, apologies if we don't get to your questions. So first one we've had in is regarding Northern Ireland. It's come from Andrew and a couple of others, but I'll use Andrew's as an example. So Andrew's company is based in Northern Ireland, packaging supplier in GB manufactures plastic packaging, and he pays for tax at the point of manufacture. Will his firm have to pay this again when we import the packaging into Northern Ireland, or do they get the supply direct from the EU? Will there be no tax as it's not an import? So I mean, I guess this is sort of a question around the Northern Ireland Protocol and what implications that has for the tax.
Yeah, so Northern Ireland is part of the UK for tax purposes. Therefore, if you're moving goods from Great Britain over to Northern Ireland, then no, the PPT has already been taken care of by the supplier in the UK or in Great Britain. Therefore, the movement of the goods into Northern Ireland is not subject to further tax. The EU, if the product has been produced in the EU, they introduced the tax in January 2021. Therefore, this would already be accounted for through that EU supply chain. So again, I wouldn't expect any further tax to be paid in either case there.
Thank you. I hope I answered your question, Andrew. Sorry for slightly garbling it. A few people just asked about the recording of the slides. It'll be sent to you by email. If you don't get that email, please do get in touch with us and we can send it to you direct. Question about goods going between the EU and the UK. So Ray, for example, has a company registered in Ireland and the goods are moved back and forth between the Ireland and the UK. Will the company in Ireland or the EU member state need to register to the EU recycled plastic tax separately to the UK plastic packaging tax?
Yes, so for goods moving from the EU to the UK, it's the UK import of record that's going to have to account for it, and they would need to be registered for the tax. There would be no further charges for the tax if the product is then returning back to the EU. If the company is in the Republic of Ireland, they're going to be classed as the importer of record because they're using the DDP Incoterms. Then yes, they would have to be registered in the UK for the tax, and they would be responsible for paying the UK PPT. The company in the Republic of Ireland would also be responsible then for also taking care of any of the EU plastic tax requirements. So it would only be paid once. So if it was paid at the outset on the first movement out, then it wouldn't need to be paid if the goods went back out to the UK and then moved back over. So it would only be taken care of once in the process, just like it would be in the UK.
Thank you, Suzanne. A few questions come off the back of that, but I'm just conscious I want to get to as many different areas as possible. So a question from Simoy, who asks, for manufacturers and importers of plastic, if there is no recycled material in the packaging, what is the level of tax? Is there a tax structure at different levels of recycled material?
Yes, so there isn't a tax structure. The only thing that we know is that anything that holds contains more than 30% recycled content is not subject to the tax. Therefore, if you've got something that's 100% virgin material and not recycled, it is subject to the tax. And there's just one tax rate of £200 per metric ton weight of plastic. All of this came into effect on the 1st of April, so the tax is already in place, and then that final tax return is going to be submitted in June 2022, which is the end of this tax quarter.
Thank you. I hope that's helpful, Simoy. Question from Phil, is the tax likely to be extended to microplastics? His firm is doing tyres and other rubber products.
So this actual tax is only applicable to packaging, plastic packaging. Therefore, the tyre itself wouldn't be subject to the tax. If the tyre is then wrapped in plastic, then the plastic wrap would be maybe of primary packaging, then that plastic wrap would be subject to the tax, but not the actual tyre itself. But to note that other plastic legislation is out there, so the product could be subject to other taxes, but definitely not to the plastic packaging tax.
Thank you. And I'll do a couple more questions. So we had one from Patricia, which is asking, do we need to hold evidence from the supplier if they are exempt from PPT, and what evidence would we need to hold?
Yes, absolutely. So getting an understanding of your supply chain, working with your suppliers, if they are exempt or hold any of those exemptions that we talked about earlier, the numbers 1 to 4, then yes, hold that evidence on file. So that can be on the invoice. They could just put a statement to say that these products are not subject to the plastic packaging tax because they come under, for example, exemption 3 because they're medical products. So yes, get that in writing on a commercial document and then hold that in the file.
One last question. A few people asked this about the sales invoice. So Julie asks, are we required to show PPT paid on our sales invoice?
It's recommended that you do, as you would levy any other taxes if you were charging that out. But again, it's going to be subject to everybody's requirements. So although you may be paying an accounting for it, you may not want to charge it on. But if you do, then yes, you would certainly document that on an invoice so that your customer can also evidence that they have paid for that tax from the product that they've received.
Great, thank you. Well, we have overrun just shy of 10 minutes. So thank you, Suzanne, for answering the questions and for your presentation. We do hope everyone has found that useful. On the last slide, you will see some of the support that the Institute provides to traders, including training, consultancy, our lunchtime learning webinars mentioned by Suzanne earlier, our technical helpline, and much, much more. So, I mean, obviously, this is a free webinar. We can't get to everyone's questions during it. We've had at least kind of 60 or 70 questions asked during the webinar. So if you do need more help, please do look at our services and how we can support you. We do continue to be on hand for businesses to trade compliantly throughout all the different challenges, whether that's Brexit, climate change, or the impact of the war in Ukraine. Export.org.uk is where you can find more information about the support we are providing. Just a final reminder, we will be sending all registrants a recording of today's webinar along with a copy of the slides over the next day or so. It will also be on YouTube by the end of the day as well. Please do get in touch if for any reason this email doesn't come through to your inbox. We'll get it sent to you as soon as possible. As you leave, please do let us know what you thought of today's webinar and any suggestions for topics on future webinars by completing the exit survey. But for now, thank you for joining us today. I hope you found that useful, and I hope you have a great Easter bank holiday weekend. So thank you, everyone, and goodbye.
Thank you. Bye-bye.